3, 2, 1. This is the Own the Block podcast with your host, Josh Derriman and Pierce Burton.
How we doing? Welcome to the Own the Block podcast with your hosts, Pierce and Josh Derriman. We got Steve Fisher here with us today from The Insurance Team. His insurance company is licensed in 44 states, right, Steve?
Correct.
And Steve, why don't you tell us a little bit about you?
Well, I started this agency in 2009, so I have been around a long time and seen the ups and downs of the whole entire industry. Right now, this hard market that we're in, because insurance companies are all losing money. Off the top of my head, I think the insurance industry as a whole lost $34 billion last year. So insurance companies are really jacking up rates, and they're actually shutting down business in some states and certain locations because of a lot of it has to do with wildfire. A lot of it has to do with the cost of building materials and laborers and all that type of stuff.
So those are the main reasons for those increases. And so what percentage do you think the increase of insurance is going to be maybe over the next 5 years because of those losses? Any idea?
We just got notice of one carrier here in Arizona is raising home rates 30%.
Wow.
I know a couple carriers in California have applied for 40 and 50% rate increases.
So, Steve, you're talking specifically about Arizona and California, you know, some of those states going up in insurance. Are some of the even better areas for insurance where there's not as many natural disasters? Are they having to absorb some of the higher rates in other states as well because of that? So you're seeing it across the board?
Yes. And the big cost of that is reinsurance. So literally insurance companies have insurance on insurance. So like when a hurricane hits, one company might have like a $200 million deductible, and then reinsurance pays the balance. Well, anything that happens worldwide affects the reinsurance rates. And reinsurance has lost money for about 5 straight years now. So they've actually had 30, 40% rate increases on the reinsurance, which is the trickle-down effect. So like if you pay attention in Florida, a number of companies have gone belly up in Florida because they simply can't afford reinsurance.
So Steve, you mentioned reinsurance. Can you describe that to our listeners, what reinsurance is?
Reinsurance is insurance on insurance. So say if a hurricane hits Florida, an insurance company might have, say, a $200 million deductible. So the insurance company would pay the first $200 million, and then the reinsurance company would pay the rest of the claims that they have coming in. So anything that happens worldwide affects reinsurance rates. And those rates have gone up upwards of 30, 40% from what I've seen.
Wow.
So that's the trickle-down effect. It's trickling down to all the carriers, which have to raise rates to afford the reinsurance, and clients get the brunt of that.
So it sounds like what you're saying is the insurance companies hedge, and they get insurance from larger corporations, and the cost of their hedging is increased dramatically.
Very much so.
Can you talk about what's happening in California and some other states with regard to insurance companies just fully leaving the state?
Yes, some companies, like we'll take Nationwide because that's become very public. Nationwide Insurance has literally froze all personalized business nationwide, at least through the end of the year is what they told us. We had another company called Max Insurance. I believe we have them in about 8 states. They have froze all new business nationwide, and they only do homes. So literally they have no new business coming in at all. And some companies have been very selective in states that they are not accepting business in.
And is the reason why these insurance companies are pausing insurance or leaving a state, is it a business case issue? What is the reason why they would do that?
Mostly because they're losing money.
Where do you see insurance prices going in
the cost of labor
the near future, say the next 5 years? Do you see them doubling? Do you see them tripling?
Minimum probably doubling.
Really?
Yes, and a lot of it has to do with weather claims, the tornadoes, the hurricanes. Travelers had showed us statistics that 10 years ago, a hurricane was like a $20 million claim. It's $2 billion now.
Wow.
And insurance rates have not increased that much to absorb these kinds of hits.
It's interesting. I was talking to Josh the other day, and we looked up insurance, where the highest insurance was, and it was kind of shocking. The highest insurances are all kind of around Oklahoma, Kansas, all that for homeowners premiums, which you wouldn't think. You would think they'd be in hurricane areas or wildfire areas. Can you talk about why in those areas of the country, like Oklahoma is number one for highest insurance cost?
Yes. Tornado Alley, they get all the tornadoes. They can wipe out a lot of stuff. And a lot of the rate increases comes down to the Department of Insurance, whether they approve rate increase. An insurance company generally just can't go and say, oh, we want a 30% rate increase. Department of Insurance usually has to approve those. So some of those states might approve it a lot faster. Some of them, they can file and then get approved. Some states have to get completely approved. California, if I recall the dates, 1988, it went to a public vote, and anything over 7% has to go to a committee to approve. The insurance companies have to submit all kinds of documentation to get that approval. And last I heard, 6 months to actually get an appointment with that committee. So by the time all of this cycles through, it's a year old, 2 years old. And the California Department Commissioner, through all of COVID, did not approve any rate increases. So just this year he has started, but literally California went about 2.5 years without approving any rate increases. So they're already so far behind the ball.
As a consumer, what can I do? Any type of improvements to my property, anything like that, to get a lower rate on insurance?
One of the biggest ones are replacing your roof. And if you're in a wildfire hazard area, cleaning out all the area around there to help prevent your house from catching fire. California actually has implemented some discounts if you help protect your house due to the wildfire.
Does installing security cameras help bring down the insurance premium at all?
Honestly, security cameras are a very small discount. It doesn't make a huge difference, to be completely honest with you.
So if I get a total loss in my house and there's a claim, should I be documenting with a video of like everything in my house in terms of furniture, valuables, all that different type of thing for that claim, or but like prior to?
Yes, we ask clients to take pictures and to walk around with a video camera. If your house completely burns to the ground and everything's ashes, the adjusters are going to start asking you, what did you have in there? And sometimes you have to prove videos. If you have, some people have a TV in every room, including, above the bathtub. They might have 12 TVs. You kind of have to prove you had 12 TVs to the adjuster. So if you have a camera or just walk around taking videos, you can just send that to the adjuster, and they know, say you have a loft in your house, you have a TV, you have a couch, maybe you have some games or something. You kind of have to prove a lot of that stuff to the adjusters.
Steve, I have some experience in this. I've had family members burn their house to the ground, and you get this documentation and you leave it in the house because where else are you going to store it? So I've run into that where you will have gold coins, couches, TVs, expensive clothing, things like that, and depending on the insurance company, they can actually really write you rough on documenting that, or some insurance companies don't. And what dictates that? Is that something that you take into consideration when you're placing a policy?
Yes. I mean, we only work with A-rated companies. We do keep track of that. Some companies do get downgraded, which potentially could mean they're in some financial trouble. So we do keep up to date with that with like AM Best. Anybody can actually go to AM Best and check ratings on insurance companies. So if you don't know, great opportunity to check your insurance company. But yeah, we always tell people to put those videos and pictures in a fireproof safe. There are some online companies you can upload that stuff to so that it's in the cloud so that it doesn't get burned up when situations happen.
So I own a good amount of rental property, Steve. Should I be requiring, I've always thought about this, should I be requiring real estate the renters to actually have renter's insurance also? Is that necessary? I don't do that right now, but I've always thought that it might be a really good option.
We always do, because your policy does not cover anything for renters. Say they have a dog that even if your contract says they don't have a dog and it bites somebody, they're going to come after who has the most money. Generally, it's the landlords, right?
For sure.
So it helps protect you. Plus, say if the house becomes unlivable for a covered claim, your policy is not going to put your tenants in somewhere else to live. The renter's policy would have money in there for them to live someplace else. Or if your place burns down, your policy will not cover all their personal materials or their personal property. So it covers everything for that.
So Steve, I have a story for you. When I was in high school, they voted people different things, most likely to succeed, various things. I was voted most likely to be an insurance agent. So I just want to let you know I dodged that bullet.
Hey, I tell you, when I quit Farmers, I had a friend that tried to get me to join one of the big carriers, and I went through their thing, and they do a big questionnaire and all that kind of stuff, and they actually said I would not be a good fit for an agent for them. So I'm like, look at me now.
So Steve, we have a lot of clients that have VRBOs, and can you explain the difference between insurance that you would get for a vacation rental versus a long-term rental?
Yes, so Airbnbs are always stocked with all the furniture and materials and stuff. So you got to make sure that you have that covered. A general landlord policy, you have the option to include personal property in there. So if you're doing a long-term rental where it's furnished, we have to cover all that kind of stuff. And Airbnbs are the same way. You have to cover all of your furniture, your bedding, your kitchen appliances and all that kind of stuff also.
For those of us that have property managers, is it a good idea to add the property manager to the policy?
Yes, we always encourage you to add it. Some carriers have an option to completely add it because we cannot actually talk to them. If you have a property manager handling your properties and they're not listed on the policy, if they call us because of a claim or something was to happen, we cannot communicate with them legally. So as long as they're listed, then that gives us permission to communicate with them. So there are issues in that if you do not include them.
One of the things that I think about is if they're an added insured, if your property manager is an added insured, the insurance company will do a joint defense. And so if there's a claim against the property, the insurance company covers both me and the property insurer. And because we have a joint defense, we're both on the same side.
Correct.
Steve, I had to ask you this just because your name, no relation to the San Diego State and Michigan basketball coach, right? Steve Fisher.
Not at all.
Do you ever get that? You know what I'm talking about?
Yeah. It's actually funny if you Google Steve Fisher, he pops up everywhere. Then there's some good professional kayakers. So it's really hard to find me on Google.
If I'm a real estate investor and I own multiple properties, do you think it's important for me to get like additional like blanket business coverage for my LLC? Do you think that's important?
I believe it's very important. And actually some attorneys will actually tell you to have each property in a different LLC to help protect you. Because if something was to happen and you get sued, there's limits to the policies. When you put landlord policies on a business policy, you have much higher liability limits that will help protect you also. And you can add multiple properties and multiple LLCs all on one policy.
You guys are talking about an umbrella policy, correct?
Yes.
Yes, you can add an umbrella, but on a business policy, we always do $1 million minimum liability limit, and then you can add another $1 million umbrella. If you do your landlord policy on a personal policy, usually most companies limit liability at $300,000 to $500,000, and then you got to do a personal umbrella, which covers the rest of your household also. So if you put them on a commercial policy, you get a lot more protection.
And what do you recommend typically in terms of deductibles on a rental property?
That's actually difficult because most people in rentals don't take care of the property like if they own their own house. So landlords typically do have a little bit higher claim propensity than a personal home does. We've seen people that have put motorcycle parts together and brought a motorcycle in the house and we're doing donuts inside the house with like the whole flooring and then with the exhaust, we had to redo the drywall and painting and stuff. So some of them can have some huge claims. We always have to recommend what can you afford if there was a claim. Now, I would also look at the differences in the cost. Quite often, there's a big difference between a $500 and $1,000 deductible, but anything over that's really not a huge difference. Sometimes if you go $1,000 to say $1,500, it's about $30 a year. I don't think that's worth it for the client. So sometimes ask for the differences in the rates for different deductibles. Sometimes it's just not worth it for a client to go higher.
Yeah, for me, I looked at that with my main insurance company that I use on most of my rentals, and the difference per year between having like a $5,000 deductible and a $10,000 deductible was like $10 per property, and I was like, let's do it. But if you drop down past that $5,000 mark on the deductible, the premium skyrocketed, like almost doubled. And so I think that's something that a lot of people don't even think about or look at when they're owning rental properties, is playing around with that deductible and seeing where that kind of sweet spot is for your properties.
Right. Now, investors might be able to go higher deductibles, but if it's a family that they were living in a house and bought a new house and they're just renting that one house, they might not be able to absorb a huge deductible. So sometimes it varies on what you can afford in those regards. We actually had a client that did that. They rented out the house, bought a new house, and within 2 months they had about a $40,000 water claim come through because one of the pipes burst. They had a high deductible. They didn't have the money at that particular time to absorb a $5,000 or $10,000 hit.
So, Steve, we see a lot that insurance is really a tertiary concern for clients when they're looking at homes. But we had a client, this is a good example, that just purchased a home with cash in a Gulf state. And she purchased the property. It was a very nice property. She got a good deal, but then realized her insurance was $5,000 a year for a relatively small home, which was a complete shock to her. I've also had clients that have purchased properties that they've been properties with a known history of claims, and that can make a dramatic difference on the policy amount. Can you talk about that?
Yes. Generally, if a house has a water claim, the odds are very high it's going to have another one, because that potentially means it's got bad piping in it that you might want to replumb the house. So yeah, houses that have claims, a lot of companies will still surcharge because the property has a claim.
Do insurance companies have a database on clients? So if you have a lot of claims with, let's say, Allstate, and you went to a different insurance company, do they have a shared database so that they would know?
Yes, it is actually a clue report. We cannot issue either a home and auto policy without, at the very minimum, running a clue report, which is a comprehensive loss underwriting something. Now I can't think of it. But it pulls up all the claims attached to your name. Glass claims, even on a windshield or towing, is considered a claim, and even on auto quotes, that is a rating factor now.
One thing I wasn't aware of, Steve, is we got in an apartment complex that I rehabbed completely. We redid all the electrical in the property and also put a new roof on the property. And the insurance company that I had doing my insurance actually allowed the year built to be like we did it last year, so 2022. And I was confused as to how that was even possible. Could you explain that?
Some companies will do that. Not many will do that. Like if you replace a roof, they will give you new credit for having a brand new roof. Like when we do a quote, we have to do updates. And if you put like a roof of 2023, then that roof gets full value. If you have a really old roof, some companies are actually doing actual cash value. to where the older the roof is, the amount we pay drops. Sometimes it's 2 or 3% a year. So if you actually put a new roof on, you would get that full credit. Now, on the whole property, it seems kind of rare that somebody would re-age the entire building like that.
Yeah, I was kind of I was shocked that they allowed us to do that. Like underwriting allowed that to happen.
Especially without plumbing. The plumbing is still old, so.
No, all the plumbing was brand new too.
Oh, the plumbing was okay.
Yeah, so basically the whole building, we gutted the entire. It was a 12-unit apartment complex. The entire apartment complex was essentially gutted, new plumbing, new electrical, new HVACs, new roof, everything.
Okay. Yeah, that is one of the benefits of actually working with a broker, that we can call underwriting and have that discussion with them. An online carrier you can't do that with.
Yeah, everybody should have an actual insurance person that they know. You know, a Steve, a Bob, a Josh, somebody, but preferably a Steve, right?
Yes. For instance, if you have a claim, most companies actually surcharge you 20% the first year, 15% the second year, and it kind of staggers that way. Some carriers still rate on 5 years for claims. We have 2 companies actually go back 7 years. I've seen claims pay out on a home for like $300. Well, the surcharge is more than that.
So you talk about clients having multiple LLCs. Let's say I'm Pierce and I have Josh LLC, Steve LLC, and Bob LLC. Those are the names of my 3 LLCs. If I have a claim with Steve LLC, does that then affect a premium with Josh LLC or no?
In some situations it can, depends on the carrier. Sometimes we still have to rate on the owner of the LLC. So that claim could follow you.
So that goes back to the Clue report.
Correct.
Okay, so is there a way for me to block that from happening where it's not rated on the owner and it's rated on just that one entity itself, or no?
Not really.
Okay.
So Steve, something that I've had with a challenge with the insurance industry is it's very difficult to understand what is actually covered. And I've done this myself where I've had insurance and I've read through all the insurance disclosures and I'm still unclear of what is and isn't covered. How does a consumer combat that?
I had an old veteran agent tell me one time, virtually everything is covered in a policy. Look for the exclusions. That's what's going to tell you that's not covered. Which the biggest things are flood insurance is not covered, and nuclear attack, and nowadays it's terrorism.
So Pierce, can you talk about your experience with the flood that came from the street?
Yeah, so I had a property and it wasn't a flood. It was a sewage backup. And it was 2 triplexes that I owned. And basically insurance came out there and determined that the flood happened the backup of the plumbing happened on the city side, and then it came up through the pipes and basically put sewage all throughout the 3 units, right? Some units being worse than others. Now, my agent originally thought that would be covered regardless if it was on the city side or on my side of the property. What him and I both came to find out was not only was it not covered because it was on the city side, so that wouldn't have been covered, but they didn't cover that type of sewage backup and it flooding the property whatsoever. And I tried to add it to my policy again, and they said we don't provide that type of coverage. And this is State Farm.
Generally, that's correct. Usually, like the city would be liable for that. Now, a quick general rule: flood is anything that comes into the house from the ground. If it comes from above, it's considered rain, and that's covered.
Okay. So even though it's sewage coming from a pipe, Like it came directly out of the toilets, out of the sink, out of the bathtubs, and overflowed. That's still considered flooding, even though it's sewage.
I think that goes to the challenge for consumers, is that it's not obvious that those are the distinctions. And so I know I've had claims where it almost seems the acceptance or denial of the claim is random, and so that could be tough on a consumer because you don't know what is and what isn't covered. So in this example, Pierce, did the insurance company cover your attorney fees?
No, they didn't cover anything, and so I'm suing the city, and that's still ongoing, and this has been going on for 9 months, and the sewage backup problem has not been fixed. So I actually sent Service Pro out there to do a clean out of the property. While they're there, it backs up again and overflows. Service Pro throws up their hands and goes, yeah, we can't do anything if this is just going to continue to happen. And the city has not fixed the issue. So it's actually been continuing to happen, and I can't get the properties fixed or rented because of that issue.
I think there's a valve that you can install that prevents backflow. So
a plumber did say that we can install a backflow valve, and so I actually have a plumber going out to do that to see that if that negates the problem.
So Steve, what are the situations where your insurance company will provide for your defense in a lawsuit?
Generally, it has to be a covered claim. Pretty cut and dry on that. Like in Pierce's situation, there was no claim, so they're not going to provide any attorneys to help fight for him. It has to be some kind of a covered claim.
So Steve, out here in California, very near to me, we had some pretty substantial fires. And so I was witness to a massive event where we had several thousand homes burn. Can you talk about what happens with insurance companies when you have a large event like a hurricane, earthquake, large fires? What do the insurance companies do?
The larger insurance companies generally have a reactive force that will go out there. They have campers and trailers and RVs that they will drive out there. They have internet and computers and often cell phones or satellite phones that can help the clients start working, and the adjusters will be there. And they have catastrophic adjusters where they can cross states with their licenses. Most adjusters are licensed in specific states, and they have some laws on the books that allow them to cross states at major catastrophes like that. So a lot of the adjusters will be there, and they'll start writing checks right then and there for you as long as they can prove that you have coverage.
I did see that. They will pretty rapidly and impressively go in there, start writing checks for oftentimes more than nominal amounts so that people can start not going on with their lives, but do the daily things that they need to do to pick up and move. And it was impressive to see.
Yeah, they'll give you money for the hotel, and they'll give you money to go buy clothes and toiletries and all that kind of stuff to at least get you going as it starts working through the process.
So one thing there, Steve, when a hurricane occurs in a particular area, one thing that I thought was very interesting, and I found this out for myself because I had a property in Fort Myers, and when the hurricane hit there, and I called FEMA, and FEMA actually doesn't, unless you have flood insurance, it doesn't provide any help for investors. So what are some things or insurances that you can get as an investor to kind of protect yourself from that type of situation and maybe get some relief funds on top of, if there is anything, on top of just having hurricane insurance? And can you get flood insurance? So for example, my particular property, was not even in a flood zone. But as we know, most of Fort Myers did flood. Now, my property was okay because it was just over the height of where water went. But curious about that.
Oh, lucky you, huh? So there are actually two different flood companies. There is FEMA, which is the federal plan, and then we have private flood insurance companies. Like we have Wright and Neptune and TAC coverage that are private flood insurance companies. They do have different coverages in those regards. So if you buy one, you just make sure you know which type of policy that you're buying. They have different coverages and stuff. So
even if a property is not in a flood zone, but you're in a hurricane strike zone, would you recommend getting flood insurance? Because that was another thing that I didn't even know when that hurricane hit, was if the hurricane makes water come into the property and the water comes from underneath and not from rain or a roof getting taken down, it actually isn't covered by hurricane insurance.
correct. We would always encourage everybody to get flood insurance for multiple reasons. We here in Metro Phoenix, we have mountains. When monsoon storms come through, the rain really rolls off of those mountains, and if you live at the base of the mountain, you can get flooded out. We had a situation here a couple of years ago along one of our freeways. We have a Department of Transportation has a dry canal that funnels water when monsoon storms happen. One of their technicians closed a valve that should have not been closed, and it literally flooded the entire neighborhood. All those people did not have flood insurance. So the Department of Transportation is actually paying all those people. It's taken years and years for them to go through the lawsuit process to actually get money to fix everything. So if they had the flood insurance, it would have been taken care of far faster. And the general rule, if you don't need flood insurance, it's generally pretty cheap. If you do need it and it's required by your lenders will require flood insurance in some situations. It tends to be more expensive because you're probably in a higher floodplain.
Steve, can you talk about the coverage types for homeowners? A lot of homeowners think that if you have, let's say, a fire and the house burns down, that you get the home rebuilt by the insurance company. But that isn't necessarily the case. Can you talk about that?
Yes, right. Remember, insurance is a legal binding contract. So whatever your declarations page says, that's how much the insurance company is obligated to pay you. Take the current market right now. We used to insure homes in Metro Phoenix for about $115 a square foot. Today, we do a minimum of $150 a square foot. California, we do a minimum of $200 a square foot because of all the cost increases. So if your policy hasn't been checked in the last few years, you very well could be underinsured on your homeowners. And right now, I've heard estimates that 60% of homes are actually underinsured with all the rate increases that have happened and the cost of building materials and labor. So it's just a general rule. Most of our insurance companies have a replacement cost estimator that we have to run. We put all the details of your house in there, upgrades, ages of everything, including ceiling fans. I mean, it gets very detailed, and that program gives us an estimated replacement cost for your home. And most insurance companies require us to use that as a very bare minimum.
Steve, a lot of our clients are buying investment properties in high cash flowing areas, which a lot of times means that they're buying a home at a cash value that's less than replacement cost. And so you can actually get insurance based on the cash value of the property and not the total replacement cost. Can you talk about that and why it's not wise to do it at a cash value and to insure at a total replacement cost and the price difference between those two?
Our agency will never do actual cash value. We always do replacement cost. Just because you're good and get a deal doesn't mean the cost of to replace the structure is the cost that you bought it for. Like the one example we always give, if you buy a house on a lakefront, you're paying a premium to have that lake view. We can't insure that view. All we're insuring is the cost to rebuild that structure. you still own the land. Even if the house was burned to the ground, you still own the land. So insurance is just designed to replace the cost to rebuild the structure.
So, Steve, I think one of the challenges of that is that the cost or the replacement calculation can oftentimes be wrong. To rebuild a home in California, $200 a square foot, in many, many cases is not going to cover it. And there were lawsuits that happened in California recently over that, where the insurance company or the insurance agent wasn't really providing enough coverage, and the client or the consumer was assuming that they would be able to get their home rebuilt at current costs, and that turned out not to be the case. And so you can have an AI bot create a $200 a square foot, but if you're in an area where it's $600 a square foot, that leaves a pretty substantial difference. How do we cover that? How do we make sure that the insurance company or the insurance agent is staying up to date on the actual real costs in the area?
Well, that's one of the benefits of having an agent not going online and getting coverage. Most agents hopefully keep up to date to what's going on. We have insurance company reps that will tell us we have not been able to rebuild a house in, say, Arizona for less than $164 a square foot. Well, then we use that as a bare minimum. And quite often when we say we use a certain number like that, that's just to get the initial quote. Once we go into the carrier website, then we have to run that replacement cost estimator, and that can change the numbers drastically. And those replacement cost estimators are generally updated every 3 months, so those numbers are fairly accurate. Now, in that replacement cost estimator, we can pick, is your kitchen economy, luxury, semi-luxury, or custom? You can kind of manipulate numbers. So if an agent's just using the cheapest thing when it should be $300 a square foot, it kind of depends on how the agent's rating that. And you can ask the agent for that replacement cost estimator.
But as a consumer, I cannot choose my replacement cost, right? I can't say, this home it would cost me $400 a square foot to rebuild, not $200 like you guys have rated it as such, right? I can't go in and tell you what to insure the home for, can I?
The only time I don't want to sound too arrogant. The only time we allow that is if the client is a home builder who knows the numbers. Otherwise, how would the client know those kinds of numbers?
But it is allowed, though.
Yes and no. Yes.
Like if I'm a consumer and I have a house and next door to me, my buddy is a contractor, and I say, hey, can you give me an estimate of what it would cost to rebuild this house? And I get you a contractor's estimate. I can actually have that replacement cost set at that contractor's estimate for the rebuild. Is that possible?
It depends on the carrier, to be totally honest. Some carriers, we have to use that replacement cost estimate.
Okay. Got it.
Steve, can you talk about common insurance coverages that consumers do not choose and they should look at?
One of the biggest I would say is it's called personal liability or personal injury. What it actually covers is like libel and slander. We do have incidences of people leaving a crappy review on Yelp of a restaurant, and the restaurants are suing the people, and the restaurants are winning. That personal injury coverage would give you coverage for that. Sometimes, honestly, it's $4 to $6 to $8 a year to have that coverage. We require it.
Well, what was that? Was that a bell on your side, Steve?
Yes, the stock market just closed.
Oh, I thought it was feeding time or something.
I thought I had it muted.
So, Steve, can you talk about rent loss insurance and what you recommend?
Yes, loss of use is also what it's called. What the carriers will default to a certain number, but you can change that number. So the carrier might default to $1,000 a month of $12,000 a year in coverage. Well, if you're renting the unit for $2,000 a month, you're going to be out money. we can increase that number. So we always ask the landlords, how much do you charge them for rent, so that we can make sure you get reimbursed for your money.
It seems that it's most common to be 6 months coverage. Is that available to increase to 12 or 18 months?
It usually starts at 12 months, and it just goes by a dollar figure.
All right. Josh, did you have any more questions? I have one last question for Steve before we wrap it up. Steve, so you're in Arizona, right? Do you have any good UFO stories for us in Arizona? I have to ask.
A couple years ago, they had 5 floating through the sky that they determined was the military dropping flares.
Did you see them?
No, but people I know saw them and don't believe they were flares.
I gotcha. Okay, but no personal stories, right?
No personal stories yet.
The guy interviewing me with you says that he's seen an actual alien body outside his window floating.
Do you believe him?
I don't know. Josh?
I'm hard to believe. So I do have to ask you, Steve. So what area of Arizona are you in?
We are based in Metro Phoenix area.
Okay. Were you born there, or were you paroled?
I was paroled from Illinois. My parents moved us to Arizona when I was 15, way back in 1985. And we actually got here 2 weeks before I started high school. My mom told my dad, if we're going to move, we're doing it before he starts high school. And my dad drove one of the cars out, and then me and my mom flew out. But to back up on that story, my dad's grandpa was a snowbird, so we flew out to see him one year, and somebody had quit work where my mom worked, so they wouldn't let her come. So she agreed to move out here without ever being here. If I recall the date in my mind, we landed July 14th, and she was not happy.
I lived in Glendale for a little while, and I only lived there from like January to April. And, you walk outside at about 6 a.m. and it was 8 in the 80s. And I was like, this place is not for me.
Yeah. I think the day Mom stepped off the plane, it was 118 degrees. I don't think she left the house for a month or two. It's a whole different heat if you've never experienced it.
Well, really appreciate you coming on, Steve. And, yeah.
Appreciate it.